Welcome everyone to the Q&A with the king of the gorilla army, an ape who is definitely not a dead cat. Trey trades. My name is Zach Greenberg, and I'm here with YUSC president Jake Schechter, who is from the YUSC club, and he's going to speak about the YUSC club quickly before we get started with this awesome event.
So yeah, just a little bit of background on the Yeshiva University Stock Exchange. We started a club around 6 months ago, quickly became one of Yeshiva University's largest clubs with around 200 people now. And we try to provide a discussion board and just general knowledge for people trying to get involved, trying to gain access to the stock market. We've seen what's been happening with the pandemic thus far and how many more traders we're seeing in our friendship groups and everything around. So that's generally our goal, just to try to get as many people involved as possible, try to make sure it's not such huge, daunting tasks. Anybody can, really learn and, just try to provide the best environment for everyone. So thanks for coming and talk to us. We're going to have a great night tonight.
Yeah, it's great to have you. I'm just playing.
And last but not least, Yair Noller, thank you so much for joining us and hosting this Q&A. Yeah, you're kind of turning invisible when you do that. Oh, okay.
Trey.
I love Trey.
That's cool.
We're huge fans of yours, and we're so excited to have you. Trey, to start us off, can you tell us a little bit about your background, where you're from, and how you first got involved trading stocks?
Yeah, man. Well, I want to start off by saying, obviously, thanks for reaching out to me and doing this. This is a really freaking cool thing. I wish that when I was in college or even high school, that I had the opportunity to learn about stocks and investing in finance the way that I'm able to now. So it's freaking awesome that you guys are ahead of the ball and taking finance in your own hands. So I kind of, my story to finance and investing was a strange one. I was actually a elite runner. So I trained for the marathon. My life goal was to qualify for the Olympic trials in the marathon. And I spent 10 years, training, probably about 6 seriously. And it came pretty close. I mean, I could run a marathon pretty decently fast, 2:24. You need to run 2:19 to qualify. And I ended up coming down or finding out about a heart condition. So it's no mystery that I've got some health issues. If you follow the channel at all. And they found out that I've got heart shunts. So it's a hole in my right and left ventricle, which caused some heart attacks that I had. And I had to quit my running career. It was very sudden, and I didn't know what to do. I was very, I don't know if lost is the right word, but lacking a purpose. And for about a month, I just kind of wandered, sad, pissed off, hoping for something better in life. And my buddy Brandon, he's my best friend, lives out in Fargo, North Dakota. His dad was investing in Wells Fargo on Fidelity, and I was watching. I was like, "What are you doing? That's pretty interesting." And I remember I got into Wells Fargo, and like 2 months later, I was down like $7,000 or something. I was like, "This is the dumbest thing of all time. Why did I even touch the stock market?" But after that, I really took some time to learn everything and study technical analysis and fundamentals and how to trade stocks and turn it into a pretty cool job that I'm very excited to be able to do. Outside of that, I went to college at St. John's University, Minnesota. It's a little private Catholic college out in central Minnesota. Went for an undergraduate in nutrition and dietetics, which was pretty cool. None related at all to my job or investing, but it's a background nonetheless.
Yeah, that's definitely a great background. Honestly, I've actually done 7 full marathons. My PR is 3:34, so you're way better than me.
Oh, that's awesome, man. That's good.
Yeah.
So Trey, the next question is going to come from me.
Sure.
We know that your videos are like unbelievably thorough. How do you prepare for your videos while managing to work in a job and run a YouTube channel with daily updates, live streams, you have like 10-hour videos in some of your YouTubes? How do you do it? How do you prepare? Do you prepare? How do you do it? Tell us.
So, to be honest with you, a lot of the stuff that I do is well thought out, well prepared, but I do it off the hip. I just kind of shoot from the hip. So I do all my videos in one take. I've never done a 10-hour live stream, but I have done a couple of 7 and 8-hour ones. And a lot of that's just, just straight from the head. And I just try to think about, the way that the concept works, not so much the details, because if you understand the concept, you can work yourself through the details. So if you truly understand what you're talking about, you don't need to have a speech ready. You know what I mean? Like, I can just understand the concept, get my thoughts on it in whatever way that I would do it. I'm not a very professional guy, I would say. I like to keep things really understandable and digestible. On the channel, I call it the ape language, a way that anybody can understand. And I just try to shoot from the hip and keep it that way. But don't get that confused for for not being ready. I mean, there's a lot of time and research that goes into it. That probably takes more time than creating the videos, is digesting different research that comes out, different, data, different chart setups, XYZ, different, factors that play into whatever I'm talking about. But the big balance for me with my job, which I'm not allowed to talk about, unfortunately, it is a government job. That's as much as I can say about it. And YouTube is just a matter of scheduling. So I'm a creature of habit. I eat the same freaking dinner every single day. My Subway meatball marinara with pepperoni. It's just a schedule, So I get up at 3:00 in the morning every day. I do my morning scans. I try and figure out what stocks are looking good. I dig through my research, get ready for my live streams with whatever info I think is necessary, and then I stream. Job for me is dependent on the day. I mean, I am on a medical profile, so there's a lot of things that I can't do because of my heart condition and what's going on with my eyes. But the balance just comes down to time management, making sure that I've got everything blocked out in a certain way that I want to play it. Honestly, it's something I think a lot of people could do. I don't consider myself special in the least bit. I think I'm just some regular dude who got really lucky with the timing. So.
It's great. Has it evolved over the last few months, how you prepared and how you went about doing the videos?
Oh man, if you go back in time to the first video I ever posted on December 16th, 2020, it's night and day. I didn't even have a camera. I was just screen recording straight off my computer and just talking strictly about technical analysis. So I tried to be the best at a certain stock, like understand everything about a single stock, and then it all evolved into this. So I was focused super heavy on this direct niche of investing, which is technical analysis on swing trading. That's a very specialized niche, and a way that I found I was able to kind of make myself stand out on YouTube. And that's kind of how I got into AMC. I was planning on swing trading it, believe it or not. It was a complete accident that this all happened, but it's definitely evolved. So back then, much less organized. You don't really know the questions to ask until you know what to ask, if you know what I mean. Like, there's a lot of unknowns, not necessarily about investing, but about how to pitch investing on YouTube. So it definitely has evolved over time. I think it's much more organized and much more relaxed. I have a good direction. I'm able to. It used to take me 3 or 4 takes to make a video, and now I can make it in one pretty much every time, which is good. So it comes with everything in life. It's experience. It's a matter of continuing to put in the work and get better at whatever your craft is.
Awesome.
Thank you for that. And as we go into the next topic, which deals more with a little bit of the investing side, I want to just quickly remind everybody of our YUSC disclaimer. Everything presented in this group is not to be considered financial advice, and it should be treated as an academic exercise. Just starting off, we have quite a range of the expertise within our group. Some people are much more experienced than others. What are some key indicators you're looking for in a stock, or a stock that you're going to publicize and speak about?
Yeah, man, great question. So what I specifically do on the channel is primarily swing trading. So I'd say that probably 50 to 60% of the stocks in my portfolio I only hang on to between a couple days to maybe a couple of months. So what you're looking for is momentum, right? You're not so much caring about the fundamentals of the company, right? Their income statements, who their management is, their cash flow, their liabilities, their assets, all that sort of stuff. You're looking for momentum. So news catalysts, good technical setups, how high is the volume, right? There's a lot of big pieces that work into the chart setup. And honestly, there's big 3 pieces that I look for, which is it's a technical thing, but I don't know if a lot of people understand this. Maybe they will, maybe they won't. But it's certain indicators to cross over each other, right? So I look for the 15 moving average to cross over the 200 EMA, which is the exponential moving average. I look for a bump in volume, which indicates that there's unusual trading activity. So for whatever reason or another, you've got more investors looking at a particular stock. Then I look for a news catalyst that can be driven and ridden long enough to sustain a couple days to a couple weeks to a couple months of price action. Good example is CCIV, right? So CCIV had merger news that they potentially were going to merge with Lucid Motors. That is a news catalyst that can drive price action, hype, momentum, volume for a prolonged period of time. You saw it go from $10 all the way up to, I think, like 65 or something. And that lasted a good couple of months, right? So you're looking for setups like that where you can ride momentum, ride the hype, and you don't really care about the company fundamentals, because you're still making money regardless of what the company is doing. You're riding, it's essentially buy the hype, sell the news, right? So that's what swing trading is. And that was what my main strategy was when I got into the stock market.
Awesome.
But don't get that confused with long-term stocks, right? That's just one simple method, right? There's a million ways to make money. I want to preface by saying that, right? Company fundamentals definitely matter, but just not for what I do, if that makes sense. Sorry about that. I didn't mean to interrupt you.
No worries. So you mentioned how, there's a certain level that, you want to pay attention to the momentum. You want to focus on what's happening in the news, how often the stocks are traded. And as of recently, when we have, much more, a much larger, younger demographic getting into the trading scene, what do you think that some of the longer term results or effects of this movement, where a lot of people are focusing more on the momentum and that kind of side of things, as opposed to like what you're mentioning, the fundamentals.
So what do I think the consequences essentially are going to be after these crazy moves are over? Do you want to elaborate a little more on your question? I apologize. Maybe I'm just not grasping it.
Sure. So just in the coming months or shorter period of time, how do you see this movement moving forward? Whether it's going to be more prevalent or less prevalent, or just really, what do you see this trajectory? How do you see this ending up
with AMC, right?
I meant generally with this movement towards focusing on momentum.
Oh,
like you said,
right. Okay, so I'm getting you now. So I think the stock market is fundamentally changing a lot. So if you look back 20 years ago, right, the thesis behind investing is you put money into a stock that's got great company fundamentals, good balance sheets, they've got a future outcome for growth, right? And hypothetically speaking, you would buy into those companies because they've proven they've got good success, and you hope that they continue that success down the road. Now you're seeing a lot different of a strategy, right? So it's more of this idea of what is the future potential for growth, right? So what Warren Buffett would do is he would analyze previous quarterly statements, annual statements, right? He wanted to see the proven success and not so much the future success of the company, right? It's your classic blue chip stocks. And now it's about what is the potential for future growth. That's why P&E ratios are so absurdly, outrageously high these days, right? Like look at Tesla. You want to tell me that Tesla is actually worth what it's trading at right now? I mean, fundamentally speaking, no. But if you look 5 years down the road, it's possible for them to be worth what they're trading at right now. So you're seeing this transition away from that classic, traditional blue chip investing where all that you care about is company fundamentals towards a more technical investing, a momentum-driven investing, and it's definitely going to change the market forever, I think. I think you've seen it a lot over the last year, especially with new investors having the ability to make instant transactions on their phone, buy and sell within a minute, 30 seconds, 10 seconds, 5 seconds. That changes the market forever. I mean, you look back, 30, 40 years ago, most transactions took place on paper. You'd have to call your broker, So a lot of that stuff, you can't have the same sort of hype, momentum-driven investing where a lot of emotions come into play, right? Because you have a lot of time on a 15, 20-minute phone call to change your mind and be like, this probably isn't a good idea, But if you got 1 second to make a trade, that changes things, exponentially. So I think you're seeing this slow transition over towards more momentum-driven, hype-driven investing where you're more trying to capitalize on momentum because, think about this. When a stock, if you look at stock's yearly chart, right, how many times does it bounce back, just hypothetically speaking, between $10 and $20 before it finally gets to 25? Think about all the times you're able to make money when it bounced between $10 and $20 before it hit 25 bucks, You could have probably made money 5, 6, 7 times, rinse and repeat it. And people see that, So it changes the way the market works. And I think you're going to see a lot more of this hype-driven, momentum-driven swing trading strategy, which in the short term is going to affect, how fast a company can grow. But in the long term, you're still looking at the same big picture where it reaches the end goal. People just capitalize on the short-term gains. Does that make sense? That's kind of a long ramble answer. If you watch my channel, you know that I like to ramble, but
no, I thought that was pretty clear. Actually, that was a good answer.
Cool.
So thank you.
Yeah, rock on.
You mentioned there for a second. You mentioned PE ratios and a lot of company valuations. Would you say there's a lot of people in our group that ask us pretty often? Would you say that the stock market as a whole, you'd call it overvalued and that due for even further correction, or what do you see this and leading up to?
I think that the market is very overextended. I definitely do. You're 100% right. I think nobody can tell you when a market correction is coming. I'm not the kind of guy that likes to spread FUD, which is fear, uncertainty, and doubt. But I do think the gains that we've had, despite the economy with COVID and quarantine, is a little bit extended, especially considering the fact that the Fed has printed out lots of money. So if you think about it, we've seen the NASDAQ, we've seen the SPY really been ripping. It's ripping a lot. But let's compare that side by side with what inflation is going to look like in 2 or 3 years, right? So let's say that on average, you're making 10, 11, 12% a year playing the SPY, right? That's a pretty good return. But if inflation goes from 3% to 5, 6, 7% because of how much money was printed to keep the country afloat, I mean, you're just barely beating inflation, right? You're making about the same amount of money. So the market's actually staying like this. It's just matching the amount of cash that's been pumped out by the feds to match what we need in the economy, right? It's kind of a Band-Aid solution. You're kicking the can down the road, essentially, to keep the country afloat. I don't know when it's going to happen. This is something I pulled. I actually had an interview with Jordan Belfort, and he was talking about this, but I think he's right. Is inflation is going to be one of the catalysts that I think drives the next stock market correction, along with some really deep rootings that you see happening with some shorting that's taking place across the stock market. This is some really deep weed sort of stuff, but when COVID and quarantine hit, right, you had something passed for big banks called the Supplemental leveraging ratio. Essentially allowed them to lend out more liquidity to big hedge funds and institutional buyers so that they can make money back on the losses that they had from, loan, forbearance. So they weren't getting paid, mortgages, all this sort of stuff. They lent out this cash, and these big institutions have been shorting the market, right? So you've got this huge amount of cash that's shorting the market, kind of playing against the grain. We got this back and forth indecision right now, and eventually when it caves in, my friends, it is going to be a pretty gnarly correction. That's my personal opinion, of course. I'm not a financial advisor, but just based on the stuff that I see on a day-to-day basis, it definitely seems overextended.
Right. You kind of mentioned that in one of your videos about Viacom, that you think that kind of happened to it.
Right. Yeah, 100%. So I think what happened with Viacom, I mean, it's pretty clear cut. You had a hedge fund that was over leveraged. They got margin called, essentially couldn't hold up on their collateral end of the deal. They were probably in the red a little bit, and they got closed out of a lot of positions. Viacom likely being a long position, and that was one of them. So you saw Viacom dip from, I don't know what it was at, $90, $100, all the way down to about 35 or 40, which is an example of what I think you're going to see across the market when this reaches the end of the road, right? When the hedge funds have no more room to kick this down, when the Feds have no more room to kick this down, the DTC has no more room to kick this down. Eventually, you're gonna find the end, and the problem has to be addressed. And that aggression, I think, is going to be a really big market correction.
Yeah. So we touched on this before, but one of the things which you're known for is definitely the recent movement of the meme stocks.
Yeah.
And best meme stocks that you heavily follow is AMC, obviously. So I mean, personally, like a few months ago, like it was like January, and like right like when that happened with like GameStop, and I remember like I think it was like that Wednesday, like I was just like, you know what, like I heard AMC, everyone's talking about that as the next one. Is that like $25? And I actually had like 50 shares of AMC at $2, and I was like, you know what, like this could go to GameStop levels, I'm getting in. And then I got in, and the next day like the market was halted, and like it just slowly went downhill. And I remember thinking like, man, like this stinks, like is it over? And then I joined Stock Twits a few months ago, and everyone just kept posting, watch this guy Trey. And like I started to check out your channel, and I learned a lot about the market, how stocks work. And like I remember AMC like dipped to $5, and like it was tough to hold, because like I was like, is this like ever gonna bounce back up? And I was just like, you know what, I'm just gonna keep averaging down. So like, I originally had like 100 shares, eventually now I'm at like over 700 with like a little under $8 average. So, and actually like now with the run up, I'm up a good amount, and that's definitely a huge amount to you. So my first question is, you've been heavily involved with AMC stock. Which factors led you to believe that AMC was a call? And did you ever imagine that how big this movement would get?
Good question, man. First thing I want to ask is, did you cash out? Did you make your tendies on your AMC shares?
I'm not cashing out until I'm holding for triple digits at least.
There you go, man. So you bought in at $2. Your average is pretty low, or you bought more?
So I mean, I got in at $2, but then like I bought also more at 25, and then my average went to like $15, and then when it dipped to $5, I like averaged down to under 8.
Right.
And I also like bought some long-term calls from like September to next January.
Yeah, those are smart calls. Are they pretty deep out the money? You got them pretty close to the current market value. You up on those?
Some I actually bought when it was at like $5.
Yeah.
And $9.
There you go.
So I'm like, yeah.
Those are printing.
Like,
that's good.
Yeah, so those are good. But then some I have at like $16. So we'll see.
Sure. Yeah. Okay, yeah, so how I got into AMC. So my YouTube channel, before AMC took off, I had just shy of 20,000 subscribers. I started in mid-December, December 16th, and AMC started popping a couple days before January 27th. We'll never forget that day. 1.2 billion in volume, hit $25 in the pre-market, and I got in 2 or 3 days before that, right? So what happened is I got in that as a swing trade. I saw GameStop doing some stupid, crazy, ridiculous stuff, and the big purpose of swing trading is essentially to find where the next big momentum hype stocks are going to be. You try to predict where everybody's going to FOMO and try to ride that momentum before everybody else gets in, right? So GameStop ran, it was up to like, I think $100 at the time. And I saw that AMC did a little bit of a move, right? It went from $2 to $4. And I went over to my Discord and I was like, guys, this looks like a freaking slam dunk sort of swing trade. Like it had crazy short interest. The short bar fee rate on that was insane. It had a great technical setup. The volume pumped up, like all the things that I look for. Check the box. We got in, and 2 days later went to $25. I saw that halt. halts on it, right? So you see these breaker halts because everything's moving too fast. You see the different brokerages completely disallowed buying the stock, which there's a million different conversations to have with that. But I saw that happen and I started doing some digging, right? I dug into the research, I dug into what's going on here, and I just uncovered a lot of stuff that didn't sit with me, right? So I could have very, very easily cashed out up freaking 400% on that, but I didn't, 400, 500%. I didn't because I believe in standing for moral ground, right? There's a lot of things that I think are unethical and unmoral about the way that the stock market works. And that's for a whole different video. But I think there's a lot of naked shorting. I think there's a lot of manipulation that takes place on the big institutional side of things that need to be addressed. And to me, this is more than an opportunity to make money, right? I think that AMC is a great opportunity to make money, but I think it's a little bit of a movement to talk about a free market, right? Because if you think about every single trade, there's a winner and there's a loser. Not every time, but like you get my point, right? If you're taking, it's a transferring of liquidity from one person to another. And every single year, the wage gap grows bigger, right? The 1% gets wealthier, the 99% get poorer. And what you see happen over the last 20 years is that institutions, hedge funds, the 1%, they have been able to transfer a lot of the wealth from the 99% to themselves through the stock market, through shorting small cap stocks into bankruptcy. I mean, think about how many people hold small cap stocks, because that's what was supposed to happen with AMC. They wanted to bankrupt the company so they don't pay taxes and they make a crap ton of money, right? They take from the retail investor because every single person holding a position there goes to zero. And they take that cash, right? So I saw this stuff, I dug into it, I was like, you know what, this is stupid, this is dumb. And I just continued to cover AMC. I was like, I'm not going to sell this because I don't think it's worth $5. I think fundamentally speaking, it's worth at least $20 to $25. I think there's money to be made here, and I think there's a reason for us to believe in this, right? We're standing up for the little guy. And that's as simple as it was. I would have never predicted, not in a million years, that AMC would be this big of a movement, but it's a freaking cool community, man. Like if you're a part of the AMC community and all that you're doing is just watching it even. Like if you're just a part of the community, you don't own any stock, you're just watching it, welcome. It is so cool to have you because there's a lot of opportunities to learn, a lot of information to gather, and we all stand for the same thing, and that's making money and standing for a free market.
That's great. Also, I had a quick follow-up question just related to the AMC. So do you think that the volume decrease we've been seeing recently in AMC, do you think that's more attributed to the movement slowing down, or would you attribute it more to people holding in general?
I wouldn't say the movement slowed down. No, I think you've got some people out there who have lost interest because it's taken so long. That's inevitable. I mean, you're never going to keep everybody, but I think the majority of it is people are waiting. There's a lot of speculation on the horizon. I mean, you've got this big proxy vote that's coming up with 6 different proposals regarding a share authorization and a couple of different factors. And I think people are waiting for this to pass because fear, uncertainty, and doubt favor the bears. And whenever people are uncertain about things, they don't want to buy. It's human nature. The stock market is run by 2 things: fear and greed, right? When people are scared, they don't want to buy. When a stock is even consolidating or going down, right? Either or, people don't want to buy. It's I would say probably 80 to 90% of people want to buy on the rip up because they want to make money just like that. It's the instant gratification thing, right? So I think the volume is low because AMC hasn't had any hard rips lately. I mean, if you look back to when AMC went up to $11 and then to $14, the volume started pumping up, and that's not a coincidence. It's FOMO, fear of missing out. So people are driven by greed. They want to make money when the going is good, and they don't want to buy when the going is tough. I can speak on that for myself. I mean, I feel like every investor or trader out there has made that mistake where they buy into something that's ripping because it's ripping. The fear of missing out just gets you, pounds you right in the chest, and then you get burned on it. But I don't think that's going to be the case with AMC. I think it's just the volume is low because people are waiting for that next rip, and you're waiting on a catalyst of some sort. So I don't know if it's going to be, some great news article that comes out or, some decision on the authorization, the 500 million share authorization. They'll vote yes or they'll vote no. I think you need some sort of catalyst to get things moving. Maybe it'll be an earnings report. Maybe it'll be, they've got Black Widow coming out soon, or Mortal Kombat, or Demon Slayer the movie. Like maybe it's going to be some freaking movie that just outperforms by way over whatever people thought it was going to be. But I think people are just they're doing this. They're watching. They're watching the screen, waiting, thinking, when's the time going to be? And I think the volume definitely needs to come back for AMC to do what it's got to do. But that's a whole different topic.
So speaking of like a catalyst, so the past 2 weeks, the short borrower fee, you can see on like our borrow desk or Fintel, has jumped from 1% like 2 Mondays ago to now over 26% as of yesterday. Actually, today it didn't update, I guess, because there are no shorts available. And the last time that happened on March 10th, the fee went from like 1% to 12%. And then within 8 days, the price jumped from like $9 to over $14. So now that the short fee is even higher than the 14%, do you expect to see another run up like to the $14 high or even higher? Or do you think that it's a little bit of a different situation?
I think I'm a man of trends and history, right? I think history repeats itself and trends aren't coincidences, right? So as a trader, I like to pay attention to what the charts say. And you have a very, very similar setup right now as before we hit $14, right? So we had the stock trading at $5, maybe a month and a half ago, 2 months ago, and it ripped up to, $9, $10, pulled back, and it ripped up to 14. Before that crazy run up, you had what I call a triple top. So essentially between $5 and $6.50, you had 3 times when the stock tried to break 650. It rejected at that resistance of 650 and came back down. Did that 3 times, right? And then the 4th time it came up and it ripped right through that resistance line. You've got the same sort of formation, that technical setup happening right now with like this $10 resistance line, 1050, somewhere in that range, right? You've got 2 tops already at that resistance line, and I think it's going to do the same thing. I think it's going to get a triple top setup. It's going to reject a 3rd time, and I think it's going to break through. Now, if you do the math, when we ripped from $5 up to 14, that's about a 3x. So if we were to follow that same sort of trend, and of course we can't predict what's going to happen in the future, all we can do is look at the past and trends and take a guess at what's going to happen. But if you were to take that same trend, you would get, where we're trading right now for at $9, $10 to about 30 to 33 is my estimate. And I think that's going to be the setup that really starts getting some shorts scared and causes them to cover, which is going to lead to the beginning of what I think is going to be the short squeeze. Now, nobody knows when this is going to happen, but if I had to take a guess at when you're supposed to see some good movement starting, I think it's going to be about the beginning of May. I think beginning of May, you're going to start seeing some really nice moves, and it could take, anywhere between a month to 2 months to really get where we need to go. An example. GameStop, right? So GameStop before it went up to $500. It took little baby steps along the way, right? You can't go straight from a toddler to the Olympics. You first have to go through JV, and then you got to go to varsity, then you got to go to the college team, then you got to go to the Olympics. So GameStop went from $10 to $20, back down to 15, back to 20, up to 40, back down to 25, up to 40, and then it jumped up to about 100, and then it ran up to about 200, and then it ran up to 500, right? So these little baby steps along the way to 500, where it peaked out, right? It took some time. That you're looking at about a 6-month process from $10 to $500. That's quite a while. I mean, so when you look at the grand scheme of things where AMC is sitting right now, it's been about 4 months now, so we're taking those little baby steps on the way to wherever this is going to squeeze to. So, why am I blanking right now? I forgot what we were talking about. I always go on these rants. but
I asked about the short borrow fee.
Yeah, right. So to come full circle to that, I think that short borrow fee rate is going to be, some sort of catalyst that puts that pressure on the short positions, right? So that's an annualized interest rate. They pay that annually. And if you're playing with a lot of money, that doesn't sound like a lot, but if you're playing with $5 billion at a 26% interest rate, right? You're paying freaking $1.25 billion a year. That's if it stays completely stagnant at 25% short borrow fee rate. That's a lot of cash. And they could be playing with more money than that. We don't even know, So I think that's a great catalyst. I think the utilization being maxed out is absolutely beautiful. I think the fact that you've got over a quarter of the available shares for purchase out on loan is absolutely phenomenal. There's a lot of great things happening right now. And I wouldn't be surprised, like you were saying, like you were hinting at, if in the next few weeks we see another great move. I would anticipate, like I said, early May. That's what I'm thinking.
I mean, last quickly before my next question, but I know you touched upon in one of your videos that it could be like a Tesla type situation where it's not just one squeeze, but it'll be multiple squeezes, pushing it up further and further, versus GameStop, which was kind of one big squeeze and then it kind of just went
right
down.
I think that's entirely possible. I'm sorry, I didn't mean to cut you off. Go ahead.
No, yeah, go for it.
Cool. Yeah. So what I was getting at is I think. It's possible because what happened with Tesla is it had very, very heavy short interest, right? Not a lot of people believed in Elon Musk or in Tesla. They thought that that company was going to die. I mean, they were on the verge of bankruptcy at least one time, right? And Elon Musk proved them all wrong. The shorts doubled down, absolutely nailed that thing to the cross. And big institutions and big buyers stepped in, the whale stepped in, and it slowly squeezed up. And what you saw happen is 3 sort of things, right? It was a cycle, this endless cycle. This is what I call an endless feedback loop, right? So you've got options, call options, which contribute to what's called a gamma squeeze. A gamma squeeze is essentially if you have a $15 strike on a call option and the stock is trading at $10, the market maker is not going to buy the shares for those 100 shares per contract at that $15 $15 strike until it runs up past that break-even price, right? Or at least close to it. And what happens is you cause this gamma squeeze by delta hedging. Delta hedging is this idea that, okay, so these call options are almost in the money. They're getting very close in the money at the break-even price. So I'm going to purchase the 100 shares at market value so that I have the collateral to match if these end up getting exercised. And since they buy them from market value, it pushes the stock price up, right? So you've got this combination of the stock price runs up because first off, you've got buyers that believe in the company, which leads to shorts covering positions. Shorts covering positions is coming from the market. They buy from the market, pushes the price up, which leads to call options going in the money, which ends up pushing the price up because they get hedged for. And then it reaches this high point. Now, what happens at this high point? Some people take profits. Shorts double down on their positions again. Some call options end up, being back to out the money, and the stock price runs down to a new floor at whatever that support level is, and then it rinses and repeats. And we've already seen this happen once with AMC, right? It ran up to $25. You saw the shorts double down at $25, ran all the way back down to $5, and then it's slowly waking its way back up. And Tesla, that took about a year. I mean, there was a year-long process where shorts would double down, they get burned, they double down again, they get burned, they double down again, they get burned, the call options keep running up, it keeps getting hedged for, and it creates this endless feedback loop where you have this year-long squeeze. Now, I don't know if that's going to happen to AMC, but it seems very likely. Now, obviously, it's for different reasons. I mean, Tesla is a very fundamentally strong company, and AMC is a completely different company entirely. But the following, right? Remember how we were talking about company fundamentals don't seem to matter as much in today's market? It's the idea of the sentiment and the buyers who step into the stock. Because ultimately, what this comes down to is the stock is worth whatever that stock is trading at that day in that exact moment, right? People think it is worth X amount of money. So if everybody that buys AMC stock thinks it's going to be worth $10,000 someday, and they keep trading until it hits $10,000 and nobody sells, you're going to have this endless feedback loop until it gets to wherever it's going to go, as long as that's the general consensus of the market, if that makes sense. So that's why I'm saying I wouldn't be surprised if you see another sort of Tesla-like year-long squeeze. I hope it doesn't take that long, but who knows? I mean, it just wouldn't be surprising. Does that make any sense?
Yes, yeah.
Okay, thank you. And so the next question, you mentioned your interview recently with Jordan Belfort, and during that interview, he spoke a lot about Bitcoin and the cryptocurrency market. So we just want to ask your general thoughts on that. People getting into the cryptocurrency market, investing in crypto stocks, and using cryptocurrency as almost a commodity as a way to sort of fight the US dollar right now.
I think cryptocurrency is going to go on a really nice rip. I actually own some. I own some Bitcoin. I think I've got like 0.7 of a Bitcoin. So a little over, what is it trading at right now? Like a little less than 60,000. So like $40,000 of Bitcoin, something like that. And I'll plan to buy more down the road. But I think that cryptocurrency is not a meme. I don't think it's a joke. I think it's here to stay. There's way too many things going on right now that say that cryptocurrency is going to be a dead cat someday. This is something that was told to me. It's the only reason that I need to believe that cryptocurrency is going to exist and stay around. And it's this: the American dollar decreases in value every single year, while cryptocurrency, Bitcoin, increases in value every single year. That's all I need to know, right? Now, do I know if it's going to be the currency of America someday? I don't think anybody does. Obviously, it's not that simple. But I do think it's going to be a way to build wealth, to accrue interest. I mean, think about this. Why would I put $10,000 in my bank account, which is going to earn me at most 1, 2, 3% a year? You're lucky with like 2%, honestly. When I can put it into Bitcoin that's been averaging freaking stupid returns, like ridiculous returns. Like people are going to turn to Bitcoin. They just are. It only makes sense. You're basically treating it as an ETF or a way to beat inflation, because your high yield interest savings account isn't beating inflation. Your American dollar is not doing that for you. I mean, bonds are barely beating inflation. You make money with bonds, but there's other ways to generate wealth in the economy right now, and that's cryptocurrency to me. Now, I don't know if it's going to be, how long it's going to take to get, to the point where, Bitcoin or Ethereum is used as a way to pay for a pizza or to go buy a car. But I think it's going to be a way to generate wealth and fight the economy in a way. And I think it's going to trade a little bit differently than the stock market does. Like when the stock market enters a bear phase, right? I kind of view it's always a competition for liquidity, right? So when the stock market's really ripping, you'll typically see that the real estate market is looking a little bit different. When bonds are down, you'll usually see that the stock market's up. I think cryptocurrency is going to be this next factor that steps into the game, right? So we're entering a little bit of a bear phase. There's some uncertainty in the market, consolidation. You've got this idea of, is there going to be a crash? Is there not? Like you just keep having this tiptoeing up and down, up and down. I think because of that, cryptocurrency has been on an absolute rampage. Bitcoin touching all-time highs, Ethereum touching all-time highs. There's always a new freaking meme dump crypto coin out there that's ripping up 500 to 1,000% every single day. And I don't think that's by accident. Every single exchange out there is a competition for liquidity. So I think it's going to be around to stay. I think it's an opportunity to make money.
Awesome. Thank you. And just as we're approaching the end, where we will open up the floor to questions, just the last couple things. What are a few stocks that you're looking at right now? A couple that you're specifically looking into that you're really liking the look of.
So I'll touch on my favorite long-term investments because it's not really fair to you guys to put out swing trades, obviously. But I'm a big believer in investing in things that get you excited. Like if I was to wake up at 3 a.m. every single day to get up and research banks, I would just go back to bed because that doesn't interest me in the least bit, you know? So I'm a big investor in technology and in innovation. I like the idea of improving the world, the U.S. economy, you know? So whatever I'm investing in, I want to believe that it's going to do something to help people. So a couple of the companies that I really like, I'll probably give you like my top 5. I really like Microvision. Now, Microvision is an automotive LiDAR company that's going to allow cars to drive themselves, essentially, autonomous driving, right? So they've got potential for buyouts, acquisitions from companies like Tesla, Microsoft, Apple, Google, Toyota, Ford. I mean, there's a bunch of different ways that can swing. And I'm in those guys because of that acquisition deal and because I think down the road they're going to be worth way, way, way more than they're trading at right now. I think people are sleeping on it. So Microvision's a good one. I like Exome. They are a 3D printing company. They focus on sand and metal 3D printing. The applicability of that is immense because they've already picked up a contract with the Department of Defense. So they could print out like, a transmission for a Humvee or rounds for a 50 cal or replace a pin in an M16. So the applicability of that is insane. And it cuts down on retail manufacturing costs so they can save money. The military can save money or, retail manufacturers could save money. The big guys, right? I just see it being a way to immensely increase the amount of cash that you can generate in the U.S. economy. So that's a good company. Those are 2 big tech stocks that I like. A medical stock that I really like, I'll give you 2, is going to be Sensonics. This is a company that focuses on diabetes. So they've got something called a continuous glucose monitoring system, which essentially allows you to monitor your glucose levels via a subcutaneous insertable, basically little digital pin, right? They put it in your arm and you can watch your glucose levels for 90 continuous days without ever having to prick your finger, right? So that's like a game changer compared to the largest company that sells, continuous glucose monitoring or glucose monitoring systems in general, Dexcom. They have a 10-day continuous glucose monitoring system. So I think that's going to be huge. I think when the market wakes up to that, that's going to be a stock that 5, 10, 20Xs that makes you a crap ton of money. It's being slept on right now. It's a small cap. All small cap stocks, as you guys are probably aware, over the last 3 or 4 months have been absolutely getting schwacked, which is unfortunate. But eventually people wake up to it. Long term, right? These stocks are value plays right now. Another one that I like is going to be Agtc. This is Applied Genetic Technologies Corporation. They are focusing on genome sequencing of the eye, the retina, the optic nerve, different ways that they can basically treat eye conditions at the source, right? So instead of treating, essentially the specific disease or illness that you have, they come into the genetic sequencing and find the defect in your coding and fix it there, which is mind-blowing stuff. That's freaking crazy. So I think that'd help out a lot of people. I think that's going to be a big runner. And then if I had to think of one more, let me think. What's one that I'm really high on? This is kind of a boring play. It's not very sexy by any means, but I like CTRM as well, Cash and Maritime. Now, this is kind of a hype stock. There's a huge following for CTRM. That's not why I like it. I like it because it's a bread and butter play. So they are a dry bulk cargo shipping company. So they acquire vessels, which essentially just ship mass amounts of dry bulk cargoes and goods across the sea. Unless you can have an airplane that's as large as a freaking cargo ship, you're never going to have a lack of necessity for that specific market. So I think that they're doing good things. They've been acquiring a lot of vessels, which is essentially like hiring more pizza drivers so that you can deliver more pizza. It's just going to increase the amount of revenue that they can generate over time. And I think that's going to be a company that goes from where they're trading right now to maybe even $10-15, I think pretty easily. So those are probably my top 5 that I pay attention to for long term.
Awesome. Thank you.
Yeah, they're definitely good value plays right now. So my next question is kind of like a little bit of a loaded question, but building off of like the Jordan Belfort thing. So it's incredible that after your interview with Jordan Belfort, which you clearly in your post video weren't so happy about how it went, somehow Adam Aaron, CEO of AMC, also known as Silverback, on Twitter gave you a shout out saying, I would be delighted to engage with you and your subscribers since so many of them are AMC shareholders. And last Wednesday night, you posted that interview on YouTube. And since then, it has gained worldwide attention. Like you're being quoted in Yahoo Finance, Business Insider, Seeking Alpha, many more like well-known stock websites. And AMC stock price, even the next day, went up nearly 10% because of your interview. So can you tell us some of your favorite parts of the interview with Adam, and what does it mean for you, like a small time investor that had like worldwide ramifications in like being quoted in all these major articles and like even affecting the stock price? And do you feel like it's good karma that Adam reached out to you right after you felt a little bit bummed about like the Wolf of Wall Street not going as well as you had hoped?
That is a loaded question, man. I'll try and hit all those points here. That's good stuff. First, I want to say that I did not influence the stock price at all. The SEC, if you're watching this right now, I promise you that wasn't me. but yeah, it was a really freaking awesome opportunity. I can't lie. So you're right. After that Jordan Belfort interview, I was pretty bummed. Not necessarily at the interview itself, because I feel like I walked away having learned something, but more so at the way that the community reacted to it, right? I take a lot of pride in my channel. I take a lot of pride in creating this community of investors who are eager to learn, eager to make money, eager to make a difference. So that was more of what I was bummed about, but it was definitely, I thought it was a bad investment at first, right? So I paid $10,000 to have Jordan Belfort on my channel to have this hour-long conversation, right? And sometimes you think you make a bad investment that turns out to be a good investment. That's what happened with Adam Aaron. So the way that he found me is his son apparently follows me on Twitter and on YouTube, and he reached out to his dad and said, hey, this guy Trey's Trades, he covers your stock every single day. He just had this interview with Jordan Belfort, the Wolf of Wall Street, and I think you should give him a shot. So I had this conversation. I'm not going to disclose any details that are significant, but I had this conversation with Adam Aaron. We talked over the phone, and he approached me and said, Trey, I watched quite a few of your videos. I saw that you interviewed the Wolf of Wall Street, and he said, during your follow-up video, you said that you shouldn't meet your heroes. And he said, I'm going to change your mind. I'm going to teach you that you just got to meet the right ones. So that was a really good lesson to learn, is you definitely shouldn't over-glorify the wrong people and take a step back and just look at the big picture of things. But it was a really cool opportunity. So I learned a lot. It was a great, respectful conversation. I feel like he respected me as a person and as an investor, which was really cool to have the CEO of AMC, the company that we all think of so fondly, have that kind of regard for me. But I take that more as not a compliment to myself, but a compliment to the retail investor and the community here, right? So by speaking to me, he's speaking to everybody. He's saying, look, we recognize that the AMC community is really royally devoted to the company and the stock, right? I think there's definitely people out there who are only interested in the squeeze, but I think there are also people out there who are going to make money on their squeeze. They're going to put it right back into AMC attendees right when it comes back down to the floor, and hold it for life. I'll tell you what, when I make my attendees, I'm holding AMC stock probably forever, because I think they're a fundamentally strong company that'll be around for another 100 years. So to be able to talk with Adam Aaron and have that conversation and have the opportunity to learn and to have him talk to people was really cool. In regards to the global piece, I definitely didn't expect to end up in an SEC document. That was that was pretty strange. I printed that out. I'm going to put it in a frame and probably put it on my wall someday, but it was a surreal experience, because believe it or not, I mean, there are people out there who are never going to believe this, but I'm just a regular dude. I really am. I'm just a guy who likes stocks, who likes investing, who's taking this opportunity to be able to speak for a lot of people. The only difference between you and me is I get to speak for everybody. I get to speak for the AMC community, but we all think the same thoughts. We all have our own opinions. We're all just regular people, and I think it's important to realize that, it could have been anybody. It could have been anybody.
That's awesome. Thanks so much, Trey. And thank you for a great event of the evening so far. Just in closing, before we open up to a few questions from our audience, any last minute tricks of the trade and advice, tips for people just getting into the market, the investing scene and the world of the stocks, just some things that sort of get people started and things that people should be aware of?
I could sit here and tell you about company fundamentals. I could tell you how to trade technical setups. I could tell you how to analyze income statements. I could tell you XYZ million sort of things that everybody's going to forget. But what's going to lead you to learning all that stuff is going to be four main things. I think this is what leads to success for every single person on the planet. And it's grit, skill, timing, and luck. Now, people will say a million times that they're not lucky, but I disagree. I 100% disagree. You're just not persistent enough to be lucky. What it comes down to is this. Your timing and your luck are determined by your grit and your skill. Grit is how hard you work. Are you going to keep showing up every single day? And your skill is how hard are you going to work at getting good at your craft? Are you going to keep learning as you're going? Are you going to be stagnant? Are you going to try and learn something new every day? Because I'll tell you this, I learn something new every single freaking day, man. There's so much wealth of information out there to be absorbed. So don't grow stagnant. Don't think that you know everything, because you don't know everything. I don't know everything. Nobody out there knows everything, right? There's always something to learn. And then that's going to bring you to luck and timing, two uncontrollable things, right? Little backstory. I lived in the back of my car for at least 6 months. I was homeless, $30,000 deep in medical debt. I had probably the worst luck of all time. But if I had just stopped, and been like, screw this, I'm just going to live homeless. I just don't care. Like, life is going to go on. I'll just be this guy forever. I'd never be where I am right now, right? So keep showing up to the plate. Keep having that grit. Work hard. Show up to the plate every day. And eventually you're going to get lucky and hit one of those home runs. Even a blind squirrel finds a nut, You're going to get lucky if you keep showing up to the plate. And you can't control timing either, but that ties into the luck, right? Are you going to hit the right thing at the right time? Maybe not every single time. Maybe once every 1,000 times, every 10,000 times. But if you show up 10,000 times, that's pretty good odds. So keep showing up. You're going to learn your craft if you keep working at it. You're going to hit that luck and timing if you keep working at it. That's my advice to anybody that's trying to get into the stock market is just don't give up. Remember those 4 things.
Awesome. Thank you so much. I think we're going to open up for questions right now. First, our YUSC co-founder and chief admin officer, Mitch Golson.
Hey, Trey, thanks so much for coming. Really appreciate it. I really appreciate what you just said about individual decision-making. I think it's very important and not talked about enough, especially today. I want to shift the conversation back to crypto for a second.
Yeah.
To ask you, how much Ethereum are you holding? Are you bullish long-term on Ethereum breaking out as that clearly second biggest, crypto stock? Itself. There's also Maker, which is flying right now. And they obviously have DAI, which is their currency. It's tied to the US dollar. How are you feeling about those ancillary big stocks like Ethereum, Maker, and others like that?
I think Ethereum right now is, you feel free to give me your opinion if you want. I'm not the crypto guy by any means. I've just kind of woken up to it over the last month and a half or so, 2 months. But I think that Ethereum is kind of like the GameStop AMC situation where AMC is GameStop's little brother, if that makes sense. I think there's great potential for Ethereum to outweigh the growth of Bitcoin over time. From what I've read, Ethereum seems like a stronger, maybe not a stronger investment, but it has pros that outweigh the pros of Bitcoin that can lead it to continue to grow down the road. If I had to take a stab at what I think Bitcoin is going to be at 10 years from now and Ethereum is going to be at 10 years from now, I think that Bitcoin's got a good shot at between $350,000 and $450,000 in 10 years. That's my guess, just based on what I've seen in the growth rate. And I think Ethereum is going to follow that same sort of trajectory with maybe a hair better growth. I think it's not going to be as much as Bitcoin is, but I think the rate of growth that it's at, it's a really appealing cryptocurrency because it's cheaper, right? You can buy more Ethereum. Somebody with, you don't even have to be a whale by any means to buy Ethereum. Like a lot of people have $5,000 to $10,000 in their bank account, which makes that a pretty sexy buy, if that makes sense. I'd like to dig more into Ethereum down the road, but a majority of what I've dug into has been Bitcoin. That's kind of my thesis on it based on trends and technical analysis, because that's the most that I've dug into it is just based on trends. Does that answer your question at all? You're muted.
Yeah. Thank you so much for answering that question. And then I have one more question. In terms of Biden's new, green energy type of proposals, pie in the sky proposals that no country is going to follow. So what renewable energy source do you think is going to break out and be that clear winner over this next 4 years of Biden's whatever the hell he's going to do?
That's a good question. Wow, I wasn't expecting to ask that. Okay, yeah, sure. So there's a couple different companies that I've invested in the past, more so for swing trading, but that I think are going to have real potential down the road. And I think there's a couple that are speculative, there's a couple that are less speculative, and probably my 2 favorites that are speculative and not. I'd say the less speculative one is going to be Plug Power. I think that's a pretty strong company that's going to piggyback off of the U.S. economy and Biden essentially really pushing for green energy over the next 4 years. And the more speculative stock is UAMI, U.S. Antimony. This is a company that is a kind of a double up on rare earth materials and green energy. And they've got the potential of kind of a business deal with a company called Ambry. And if they lock that in, especially with China really cutting off, potentially cutting off ties with the United States and rare earth metals, you've got the potential for a really, really sharp increase in demand and a really, really sharp decrease in supply with U.S. antimony. Now, that one's speculative because it rides on a lot of contingents. It rides on China cutting off rare earth metals to the United States. And it really banks on that deal with Ambry so they can double up as a clean energy and a rare earth metal play. But I think both of those companies have a lot of potential to do some really dirty stuff. And Plug has already proved it. Plug's already run up to, I think, like $65 or $70. And I think the time will come again. I think there was a small bubble. There was a bubble in green energy, and there was a bubble in tech, and there was a bubble in electric vehicles, right? And they all kind of popped a little bit. They all really hopped down back to earth over the last couple of months. But I think the future growth in the States is in those three sectors, right? I think you're not going to escape that. I think what's happening right now in the market is you've got two ponds. You've got the fundamental old school pond where you've got a lot of people who are dipping their toes. Then you've got the new school pond, right? Where you've got innovation, tech, green energy, electric vehicles, all this sort of stuff, where you're dipping in that pond too. And we haven't quite made that transition to either one or the other. And when we make that full move over to green energy, I think that's just the direction the market's going to go.
Appreciate it. Also, UAMY is under $1, so I'm looking at that.
Yeah, man, I got you. UAMY's definitely a value play right now.
All right, thank you, Mitch. We'll hear from another YUSC board member.
Vice President.
Oh, another vice president. Oh.
Hey, Trey. I just wanted to ask you what you think about Biden's proposed new capital gains tax hikes. How do you think that's going to affect the market going forward?
I think it's a really good opportunity to wipe out a lot of the country's debts, if that makes sense. So it's no mystery that the U.S. economy, the feds are tens of trillions of dollars in debt, right? And a lot of that is owed from the Social Security Fund, which I think a lot of people don't know. A lot of what the U.S. economy's debt is actually to the American people, which is a whole different topic of discussion. But I think that's an attempt to be able to raise cash so that they can continue down the road to continue to fund the country, because I think what he sees is this. I think he sees this crazy, huge deal that's going on in the market where there's this opportunity for a lot of people to make a lot of money really, really, really fast. And if they were to do that, they could take all this capital gains and pitch it towards the country, and it would help dig them out of a really big hole. Now, the U.S. economy is a lot more complicated than the capital gains tax goes up. They make a crap ton of money, and it fixes all the country's problems. Like there's inflation, and there's this huge transferring of wealth from institutions, which could potentially shut down businesses, which could shut down hedge funds that certain people are paying into. Like, it's all a big spider web. But nonetheless, I think it's an opportunity to essentially wipe out a lot of the national debt. Maybe not all of it, but a good chunk, a modest chunk, AMC, if that makes sense. But that's my take on it. It's just an opinion though, so who knows?
Awesome. Thank you. Eli?
Trey, how we doing?
Doing well. How are you, man?
Good. Vice President over here, Eli Longman. I just wanted to ask you about NFTs. So this is an exploding sector, as we've all seen. You know, Jack Dorsey, CEO of Twitter and Square, he sent out a tweet regarding a sell of $2 million for just one NFT tweet, and that is pretty phenomenal. And then Beeblecrap, who is an Instagram artist, sold like an NFT for about 90 million, which makes him like the third most valuable artist in the whole entire world. And that's just from the NFT just starting. So do you have a personal view about this NFTs blowing up and stuff?
I do, man. I do. In fact, I'm actually working on NFTs of my own. So if you watch any of my videos, you know that I use Microsoft Whiteboard and I do something called mouse art. So I'll spend like a half hour to an hour before every video, and I'll draw up like a monkey, a gorilla, an anime character, whatever it is. And I've been printing those off and making them into NFTs. So I plan on making my own NFTs down the road. It's kind of an expensive process to get going. Depending on the NFT, it can cost, $100 to $1,000 to make. But I think that it's something that's going to stay around. You've seen it in the market. You've seen any company that breathes the word NFT, they jump up 2, 3, 4, 500% in a matter of a couple of days. And I think that piece is a little bit of a bubble. I think it's gonna have its crazy runs over the next who knows how long, maybe week, month, 2 months, whatever. And then it'll cool off. And then it's going to be a sustainable investment where down the road people are like, all right, this is something that will likely stay around down the road. I think it's fascinating because it's kind of like this unique art of baseball cards, like trading baseball cards or trading like signed jerseys. It's a market. I know people say like, why would I ever buy this NFT? Because like, I'd rather just own the actual physical art piece, but you're making this transition down towards new things. I mean, that's how the world works. There was a moment in time, right, where everybody was like, why would we ever switch from coal to gasoline? That's the stupidest thing I've ever heard. Like, coal obviously works. And you can say the same thing about like this transition, potentially from, physical art over to NFTs. Now, I don't think, physical art ever go away. I'm not saying anything like that, but like every concept when it's new sounds like it'll never work. Does that make sense? So I think NFTs are definitely going to stay around. I think that they've got a future in the market. I just think it's through a little bit of a hype bubble right now, which is probably going to cool off over the next, 1, 2, 3 months, and then kind of poke its head back up down the road. But I dig them. I think it's cool. I'm actually hopping in on it. Why not?
I think
Awesome. I think that pretty much answers my question. That is nice view, nice outlook. I like that. And also Coinbase IPO just came out. Valuation, people are still thinking speculation, but really the app's use versus Binance, crypto.com. Do you have a personal opinion of what you like to use for your cryptocurrencies?
I think Coinbase is cool. I dig it a lot. I think it's a really, really solid company. And I think what happened with the IPO, I don't know how many people paid attention to it, but I never buy on IPO day for a long-term investment. The only reason I buy on an IPO day is for momentum and a day trade in and out, because the problem is you have no historical trend, right? You've got no data, nothing to compare to say, oh, this is a setup, this is what it's looking like. I can predict this is going to happen based on the fact that happened, when this happened, if this, then that, right? It IPO'd, right? So it's supposed to IPO, if I remember right, at $250. Does that sound right? Am I saying that right? Do you know it all?
250, I believe.
Yeah, 250. So it's supposed to IPO at $250. It ended up coming out at like $360 or $370 and ran up to $420. Now remember this, right? When this is a private company, investors such as, institutional insider investors buy it, and it actually pushes the price up, right? So there could have been people who bought into Coinbase at $60 and then it runs up to 70 and it runs up to 80. It's a much cleaner growth process. So when that IPO'd, there were probably people there who bought when it was at $50 or 100 or 150 or 200 who were up 100% in a single day. And if it was me, and I was at Insider Institution, and I was up 100, 200, 300% in a single day, of course I'm going to sell, Of course I'm going to sell. So I think what happened is, you had some insiders and institutions who probably dumped a little bit of their shares, and it pops back down to where it came down to. I don't know, it was like $320 or something like that. And it's starting to slowly make its climb back up. I think it's a good company. I think it's going to do great things. But I think where it was trading at when it initially came out was a little bit high, if that makes sense. I know you kind of asked about the future of Coinbase, which is a little bit different than what I'm talking about. But I like Coinbase. I think they're a good company, and I think they're going to be really competitive against the rest of the blockchain sort of companies. I think I like Coinbase more than BlockFi, if I'm being honest.
Right. It has a lot of good. Right. Yeah. Okay. So I think that pretty much answers the question. That's awesome. Yeah. So I think people are very excited for the new currencies and new trends coming in, a lot of innovation. So thank you, Trey.
Yeah, awesome. I know I answer more of the technical side of things, but that's my specialty. That's what I like to focus on. Hope that answered your question.
I love it. Yes, because if you're bullish on Ethereum, you're good.
Yeah, right.
You're a bull. I like it. Okay.
While we were on the topic of NFTs earlier, this is clearly like a fairly revolutionary technology. But outside of the digital art world, like what practical applications do you think it'll have in the long run?
I think in the long run, it's the opportunity to essentially invest in an artist, if that makes sense. So there's something that's pretty interesting that's come out here recently. What was it called? It's essentially like you can create your own crypto coin for like an influencer. Have you guys seen that? Do you know what I'm talking about? It's got a name, but I can't think of it. But I kind of think of NFTs as the same thing, right? So when you buy a piece of art, you're investing in the artist, right? You think that artist is worth the money. So you can say the same thing about the NFT, which could be split into like 100 different pieces or 1,000 different pieces. It's like taking a share out of a company. And what's interesting about that is like you could buy, if you got Mona Lisa's painting back when it was first painted, right? Probably wasn't worth back then what it's worth now. And I think it's a faster, more accessible way to be able to trade art pieces via the internet. You know what I mean? Like it's just faster transaction times. You're able to move the piece. It's pretty much instantaneous, So I think the applicability and the worth of it is in the ability to buy NFTs and maybe hold on to it, maybe not. Maybe you hold on to it for a year, 5 years, 10 years, and then sell it to somebody else, if that makes sense. So it's this idea of like cards, right? So when you invest in cards. So if I was to buy a card, it's a form of art, right? Cards are cool. They have sentimental value to you. Maybe at some point they don't have sentimental value to you. You sell them to somebody else, and it increases in value because maybe there's less cards out there. Maybe the supply has gone down. Maybe that person's dead, which increases the demand, right? There's a lot of different things that obviously play into the worth of art, but that's where I kind of see the benefits of NFTs is being able to invest in the artist pretty much instantaneously from anywhere in the world and be able to get that art out to anybody else. You can sell it. It's like a share of a company. Does that kind of answer your question? I know that was kind of a roundabout way to answer.
I mean, like I can understand like why it's revolutionizing the art world, especially the digital art world. But do you think there are any practical uses it might have in like other fields, like non-art related, not for like collectability?
Right. I think that's a good question. I think investing wise, it's an interesting field. So you could either buy NFTs or you can invest in companies that deal with NFTs. You know what I mean? So I think it's a sector of the economy that could show itself in the U.S. stock market, and you're seeing it happen already. Like there's companies like DLPN, HOFV, who are already dabbling in that. You've got Wafu. No, that maybe not one, but you're starting to see people wake up to it, right? So it's this sector in the market where people are starting to invest money, and I think it's like a this is a small pool, and then there's a bigger pool, right? I think the big pool is investing in NFTs, which is the online art, and then the smaller pool, which is kind of by the side, is investing in people who deal with NFTs. So I know it's kind of a roundabout answer to you, but the applicability outside of the actual art itself, besides making money, I personally can't see it. No.
Thank you.
We got one last question from Amit.
Hi, Trey. First of all, thanks so much for your time. I'm learning a lot. I'm actually very new to the market, and I wanted to ask you, and I hope that kind of makes sense. Besides checking trends in the stock, you were about to buy. If you have a certain stock and you hold a lot of it, when do you think, do you have any intuitions or some sort of tips, when it kind of drops or something, when it's time to sell or when it's time, to hold on, to it? Do you have any tips, when it's really, you feel like, things are going down with the stock and, that's the time to kind of sell?
No, that's a freaking great question, man. Exit strategy, right? What's the exit strategy? Is that what you're saying? I'll just assume.
Sorry,
No, you're good. You're good. No worries.
That's exactly what I'm
asking. Totally. So it's entirely dependent on whatever your investment or trade is, right? So like, I'll just pitch you two different scenarios. Long-term investing, right? Long-term investment, you don't really care if your stock goes down, if the fundamentals of the company and the strength of the company have stayed the same or gotten better. In fact, if a stock goes down and you're investing in a long-term and the fundamentals have either improved or stayed stagnant, you rub your hands together, you go like this: value, baby. I'm buying this thing on a discount. Like, this is cheap, So for a long-term stock, when it goes down like that, buying more is absolutely the way. You love averaging down. You love taking the opportunities to eat up dips, to be greedy when people are fearful, and so that you can average your returns down the road, as long as the fundamentals of the company have stayed the same or gotten better, right? If the end goal of the long-term investments, changes, like for example, if all of a sudden Elon Musk died, I probably would never want to touch Tesla because Elon Musk is Tesla. You know what I mean? So unless the fundamentals of the company are different, you buy up those dips. Short term, or swing trades, it entirely matters more, right? So for myself, I've got a rule, different rules that I follow. One of them being is to cut my losses early. So if I enter a trade, let's say that my goal, I've got a 3-to-1 risk reward ratio, right? I want to make at least $300 for every $100 that I'm willing to risk. So if I get into a trade and I've got $1,000 on the line, that means that I have to make at least 30% to match my 3-to-1 risk reward ratio, and then I have to cut my losses at $100, which is 10% down, so that I'm maximizing my trades. That way, if I have 10 trades and I lose on 7 of them, I'm only good on 3 of them, I still come out profitable. Does that make sense? So it's important to me to cut losses when you're really early and have a plan going into a stock when you were taking a trade. If you fail to plan, then you plan to fail, if that makes sense. So if you have a guideline, a set of rules, then you're not really worried about the exit strategy unless it's a black swan event like AMC, where obviously nobody can predict where it's going to go to. So to me, it's less about like knowing when to sell when it's reached its top. It's having rules in place so that you never have to worry about when to sell because you already know what you're going to do when you go into the trade. That was kind of a roundabout answers to that, but I think it's really important not to go into a stock or any sort of investment or trade without a plan. If you don't have a plan, then the odds of you coming out on top are pretty slim.
I see. Thank you so much. I appreciate it.
Yeah, no problem, man.
So to close off, I wanted to ask one quick last question. So at the end of your interview with Adam, you said you're working with the film producers, the Mulligan brothers, on a documentary film, Apes Together Strong. And I think one of the best parts of your community is that, besides for just investing, you're all about brotherhood and making a difference in the world. If the AMC squeeze works, or if any of your swing trades work and you make a lot of money, it's not just about taking the gains and being greedy. It's about making the world a better place and hopefully using like this movement of yours to help make that happen and care for one another. And I think that's hopefully what your document, I mean, if you wanted to talk about like what the documentaries can be about, and if you have experience in the film industry, and when do you expect the film to be released, hopefully in an AMC theaters near you.
That would be a life dream, man. If this ends up in an AMC theaters, I'll tell you what, I'm going to sit down and watch that thing 10 times with my $100 of popcorn and Diet Coke and Milk Duds, and I'll be one happy dude. But I don't have any film experience. This is my first time being an executive producer for something, which is a really cool opportunity. I'm glad they reached out to me. I'm glad I get to be a part of this project. But essentially what this documentary is going to be about is the process, the journey, the ups and the downs of not just AMC and GameStop, but the market as a whole, the retail investor, and the stories behind this, right? So as you kind of alluded to, this is about the story of the community. This is the tale of many, many people coming into one documentary. And we're gonna have the opportunity to speak for a lot of people, which is really freaking cool. Like I'm jacked about that. So we're gonna talk about a lot of the highs, like when the squeezes and everybody makes all their attendees, they make a crap ton of money. We'll talk about how they went from this to that, how they went from 0 to 100. But we also want to talk about the lows, right? We want to talk about the mom who is maybe because of the stock market, some bad trade that got duped, has been struggling for 5 years. Who got to turn her life around, right? We want to talk about the guy who's been living in his car. We want to talk about the dude who's 6 months behind on his mortgage. We want to talk about all these lows that were caused by a lot of some of the corruption, I think, and malpractice of the U.S. economy. It's about the little guy. It's about telling the story of the little guy and being able to give a voice to those who feel like they're not really heard. So I think it's a great opportunity because I've never seen anything like it. I don't think I've ever seen a documentary or any sort of film that was put together and was well funded. It was a good project that was made by the people, millions of people, because that's what it is. It's people all around the world that are contributing to this project. So I'm very honored to be a part of it. I don't know how long it's going to take. I would guess maybe about a year. There's a lot of details that we're not able to talk about, but what I will say is we've got some really big things in the works. It's going to be well funded. We're going to talk to some big names, and you guys should be very excited.
I'm super excited. Thank you so much for coming on tonight, and I can't wait to see the movie. And hopefully, if the same squeeze works, we'll rent out theaters for the Guerrilla Gang Army to watch the documentary together. Heck
yeah, man! Hey, like I said again, appreciate you guys for having me on, and it's really freaking cool to see people. Like I wish that I was still in college learning about investing. If I could have had a 2 or 3 year head start, oh man, that would have been the bee's knees. You guys are doing it right, seriously. It's awesome to see. I'm jacked for the community, especially between 15 and 20 years old, getting into investing like this. Like AMC and GameStop, if they've done anything right, it's turned people onto the stock market so that they can take control of their financial life. So it's an absolute honor to talk with you guys. I'm glad we could have this opportunity.
Awesome. Thanks so much, Trey, on behalf of the Yeshiva University Stock Exchange. It's been a great night. We thank you for coming.
Yeah, thank you very much. Appreciate it.
Have a great weekend, everyone.
Have a good one.